Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, September 25, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? First and foremost, we have what's called more of the same. Another narrow-ranging day, eating time off the clock right around the all-time highs. It's a carbon copy of what's going on over the last several trading sessions. She's eating time off the clock, building energy to make another move higher. Nothing has changed. There's no material change from yesterday's tape to today's tape. Therefore, 565.16, the former high, she's broken out above the former high. As long as she stays above 565.16 on daily closes, that's our current bogey. There's nothing wrong with the tape. The trend is your friend, by the way, while she's above all the moving averages. And therefore, once again, there's nothing wrong with the tape. Basically, there's no change from yesterday. And by the way, what follows a slow tape? A tape that picks up speed and is a faster tape. Right now, we have a slow tape. It can remain slow for another few days, but each day it remains slow. You're getting closer to that day where it speeds up and something happens, whether it's an acceleration, a break to the upside, or a rug pull trapdoor event to the downside. Either way, one of those two things is coming sooner than later. By the way, you might want to fire up your sticky notes. If she breaks to the upside, what is that place? What's that next target? It would be from a formula-driven perspective, or at least, if not a formula, has to be some other hocus pocus, because there's no point of reference up there. From a formula-driven perspective, the number I have that's above on the next leg higher, you might want to write this down, put it on a sticky note. It's 576.65. It doesn't have to stop on a dime there. That is the next calculation from a formula-driven perspective. On the upside, 576.65. It's sticky note worthy. What do we have from an intraday inside the number perspective? 5-minute chart. Right of the vertical is today's activity. Let's check her out. What I urge you to do is pause the video, read the notes, and go back to the chart to double check the work. This is the early commentary posted around 6:30 a.m. Eastern Standard Time. I call it 0 dark 30. We'll start the conversation with today's pivot coming in at 570.65. What does a pivot represent? It represents a number of things. A, the market will generally bounce off a pivot, whether it's coming up to it or down to it. It will generally have a bull-bear battle around a pivot. It's what turns the market either bullish or bearish, at least in a short term. A pivot has a lot of reasons for being a pivot. One of the things is they bounce off the pivot when coming to run a test of the pivot from above. This happens to be one of our favorite morning trades. The way we set it up, and you'll see this in the notes, is very simply, we take the pivot, we take the next number below the pivot, we create a zone, they bounce it either at the pivot or a spike of the pivot, run them back up for a scalp with potential, and we get our trade out of it. Worked like a charm. It's one of our favorite morning trades. Remember, pause the video, read the notes, and go back to the chart to double the work. 570.65 is the pivot. This is at 845. And if they're below the flat line, which is above that, meaning yesterday's close, it's a logical place for Mrs. Market to pay a visit. Pay a visit where? To the pivot. Give or take its support. Spiking it is okay, like down to 570.25. Remember, creating a zone just a little bit lower. And that's what we're saying. We're setting up, long before the opening bell, we're setting up a possible trade of the day. We'll see what happens later. By the way, That was the pivot. That was the long trade looking for a bounce. What about the flip side? Well, check it out. If they're above 571.30, the door's open for a target of 571.85 or higher. The higher part is the all-time high, yada, yada. They didn't get there, but 571.85 to the all-time high, not that much higher, give or take, is an overhead resistance zone where there should be a reaction in the other direction for a scalp with potential. Do you understand what that means? That means that's a short up there. 571.85. That is precisely where they ran up to, came up short, created unfinished business, spiked it, pulled back from it, went to where? Run a test of the pivot. All identified before the opening bell. This is what Inside the Number members and Live Room members are paying for. It's having the numbers, knowing where the important places are that are support and or resistance or both. That's what trades are made out of. Like I mentioned before, pause the video, read the notes, go back to the chart and double check the work. 9:30, there's your 571.85 give or take right out of the gate. They came up 2 pennies short first. They did it again about a half hour later. 10:27, there's your pivot down just a little bit more, give or take, is still a support zone. Again, pause the video, read the notes, go back to the charts, and double check the work. What's going on over in Camp IWM, my favorite market leading indicator? Well, we have relative weakness. We have a leading indicator leading to the downside, down $3.44 today, 1.56%. So we have to heed that information. Yes, they're above all the moving averages. The trend is your friend, but this can morph from a pullback situation to something more rather quickly when we see a divergence and we see my favorite market leading indicator leading to the downside. You have to raise an eyebrow. You have to heed the information. Now, we're the umpire calling balls and strikes, so realize this. You're beginning to get to an on-time type of situation. Staying above all those moving averages, specifically the convergence of the 20 and the 50, red and blue, that's a bullish situation, period, full stop. On-time situation coming up this week. Just a snapshot of the weekly chart above all the moving averages. Trend is your friend. Nothing wrong with this. This is just a pullback. So yes, they've made a lower high, but they could certainly eat some time off the clock, build some energy to challenge this high up here at 228 and change. Certainly can do that while in an uptrend above all the moving averages. The trend is up. Pullbacks do happen in the midst of an uptrend. That is normal garden variety market behavior. Write that down. Put it on a sticky note. It is a truism. What about the folks down at the transportation department? Second favorite market leading indicator, a number one canary in the coal mine. So that was down 132 points today, or about 0.8%. Not a catastrophic move, but it is relative weakness. Second favorite market leading indicators, both 1 and 2, IWM or small caps and transports, both leading to the downside. Again, we're going to heed that information. It's a puzzle piece of information or two puzzle pieces, and guess what? They're on the table. Again, umpire calling balls and strikes. We could look at this a number of different ways. While above this trend line, we've seen this for a long, long time. While above this trend line, she's bullish, even if she pulls back to it. Above the trend line, she's bullish. Inside this channel, inside the triangle, you go to the weekly chart, you could see pretty clearly the triangle. Until time is up, it's okay to be in the triangle, but breaking out above doesn't have to wait till time is up. That's fine. A breakout is a breakout. Right now, she is breaking out above, back inside, and she's not. It's just that simple. So we will use the top trend line as a bogey. Above, she's bullish. Below, not so much. What about the Q people? Same routine as the spiders, eating time off the clock. Above all the moving averages. Trend is your friend. All that stuff. eating time off the clock to really start getting above and staying above that price here. The high officially is 485.54, getting a little bit of a boost, a little bit of a goose operation after the market close on the Micron earnings announcement. And the Micron earnings announcement has Micron up at 108 and change. The reason 108.15 is on the chart is because we discussed this in the live room today. One of the members, Armand, said, hey, Micron's implied move is 9 or 10% after the market today. So we took a look. Now, 108.15 was a little more than 9 or 10%, but here they are at 108.15, even slightly above right now. 108.15 given out at about 10 a.m. this morning. Funny how that works. Semis getting a boost. Here's the SMH closing the day at 245, currently trading just under 250, 249.30 by 40. Another boost on the back of the Micron information. Back to the Qs. Anything wrong with this tape? No. Anything wrong with this chart? No. They're just eating time off the clock. They're either going to break out or they're going to fail, get below Friday's low, fill the gap, and be into the moving averages. One of those two things is going to take place. It's a question of when and which one, and it's sooner than later. XLF had a little dip today. As long as they're above 44.30, she's okay. Weekly chart, pretty good case. She's just eating time off the clock for the last 4 to 5 weeks in a row. Nothing more, nothing less. Back and forth in a narrow range when you look at the big scheme of things. Above all the moving averages, trend is your friend. We'll use 44.30 as a bogey. Start getting below 44.30 on daily closes, and it could be an Irene situation. Write down 44.30 on a sticky note, put it on the side. Here's Smashmouth on the daily chart. We just looked at it on the intraday. They're up near 250. The bull case is getting to and above this area right here. The official number in this breakdown candle high is 253.32. Paying attention to 250 is just a big fat round number. The actual number on the chart that's of utter and uber importance is 253.32. That opens the door for another leg higher. And above all the moving averages, guess what the trend is? You got it. The trend is, in fact, your friend. And of course, that is until the point in which she throws your shit out the window. How about crude oil? There's a method to the madness. Here's a weekly chart, and the reason I bring this chart up is because crude is generally some kind of an indicator / gauge. How we doing in the economy? Are we expecting, and this is globally, are we expecting expansion or are we expecting contraction? If we're expecting expansion, then what you would expect is at least stability or rising prices in crude oil as a play for future demand. Isn't that common sense? Isn't that logic? I believe so. But what happens if you're in a downtrend in crude oil? Well, doesn't that portend the opposite picture for the economy? Maybe does crude oil expect a contraction in the economy, which is why it's in a downtrending situation? I'm going to let you make that determination for yourself. I'm just bringing information to the forefront. These are facts. You can interpret them any way you like. That's what makes a market. 2 people, 10 people, 100 people, 1,000 people look at the same information, the same data sets, and they come out with a variety of different conclusions. If crude oil is in a downtrend, which would say from a supply-demand perspective, the marketplace doesn't necessarily expect an expansion. And oh, by the way, the Federal Reserve just cut interest rates by 50 basis points while the stock market was around all-time highs. Crude oil is around a low, not all-time lows, just lower, downtrending. So what is that telling you? Do we believe our lying politicians? Do we believe our lying eyes, or do we believe our logic? That's something that I wanted to leave you with this evening. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We are pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.